Hi, I'm Jimmy. In this video, we're looking at Peloton stock, ticker symbol PTON. So we'll run quickly through the basics of Peloton's business, and then we'll touch on some of their recent earnings and look at some recent news that came out specifically about the Peloton recall. And finally, we'll see if we can come up with a fair value for Peloton stock to see if it's worth buying today. Okay, so let's jump right in. So Peloton has two primary sources of revenue. One is from what they call connected fitness products. This is the revenue that's generated from actually selling the hardware, things like Peloton bikes or treadmills. And the other one is their subscription business. So we may know that if we go ahead and buy a Peloton bike or Peloton treadmill, well, we get signed up for their subscription, basically their premium services, things like classes or specialized training or runs or scenes that you can run through or bike through. And this is part of their membership programs. They're very popular and a lot of people stick with them. In fact, they have a very low churn rate. The amount of people that churn out every month is fairly low. But either way, we can see based on their 2020 revenue, subscription revenue accounted for about 20% of total revenue, while the other 80% was from the actual selling of the products that they make. Now, Peloton's fiscal year actually ends in June of each year. So this pie chart only represents the first half of 2020 and the last half of 2019. So far, they just completed their third quarter of 2021, last quarter. That just ended a couple days, or did they just report on that a few days ago? Now, one advantage of subscriptions over the selling of actual products, as we might have guessed, is that the profit margins on subscriptions is much higher. So the subscriptions part of their business put up about 57% gross profit margins compared to the selling of their products, which put up about 43%. Again, this is based on 2020 revenue. Now, because their revenue is dominated by the products that they sell, well, their total gross margins for 2020 was about 46%, which frankly seems quite good. Now, I was curious how this compared to some other companies in other industries that we might all know about. So, a company like Spotify, well, they have gross profit margins of about 26%. That's over the past 12 months. Apple, another high-quality product producer, a higher-end product producer, sort of like Peloton, well, they have gross profit margins of about 40% over the past 12 months. So Peloton's looking pretty good. Now, over the past 4 quarters, their margins have dropped a bit, especially in the most recent quarter, pulling their average to about the 40% range. But when I looked up other companies in the industry, something like Nautilus makes treadmills, frankly, more affordable treadmills, plus some bikes, some ellipticals. So things like very similar to what Peloton is doing, just on the more affordable range. Their profit margins are also right around 40%. Now, I would like to compare Peloton to a company like NordicTrack, but NordicTrack is a private company, so I can't really find that information. But either way, it seems that analysts are expecting for profit margins to land in the low 40s to mid 40s, call it 43, 44, 45% range. So for the long run, that's still quite good. Okay, now this brings us to Peloton's revenue and profit growth over the past couple of years, and then we'll touch on the Peloton recall that just recently happened. So Peloton went public back in 2019, and when I went to check their S1 filings, their revenue numbers only go back to 2017, even though the company's been in business since, I think, 2012. And if we're curious, the S1 filing is the initial filing that a company does when they want to go public. It tends to be crazy long. I think Peloton's was like 200 pages, but it's full of a ton of good information. So if you're ever researching a new company, look for the S1 file. Okay, so now we can see over the past few years, well, Peloton's revenue has ramped up nicely. The past 12 months, we saw an enormous spike in revenue there, and a lot of that, I'm sure we could guess, is very much tied to the current situation of a lot of the world, where a lot of people are staying home and buying treadmills or bikes or whatever they're buying. And I threw in analyst estimates so we could see where analysts are expecting for revenue to grow over the next few years. Those are the ones in the green bars. Okay, now let's switch over to net income. So this is their net income. Net income is the same as profits. And we can see that Peloton just recently went profitable over the past 12 months. Now, we might also notice that analysts are expecting for a slight dip in profit in 2021. And I think this is logical if we think about it. A lot of the profit generated for Peloton over the past year, over the past 12 months, came from the fourth quarter of last year. They're currently in the fourth quarter right now. So it's April, May, June of each year. And April, May, June of 2020 was somewhat of a legendary quarter for a business like this. And that's likely not to be repeated in 2021 or anytime, hopefully, in the near future. But over the long run, it is expected that Peloton will continue to grow their profits. So we can see that with the future analyst estimates. Okay, now one headwind that Peloton will face over the next couple of years, but really over the next year, is the recall that recently went into effect, where they recalled both their Tread and Tread Plus treadmills. Now, when I first heard this story, I heard it from a couple friends, and they said that a young boy, I want to say 3, 4, 5 years old, was killed when he got pulled underneath the treadmill, and there were like another 70 or so that got hurt. And frankly, when I first heard this story, I couldn't quite visualize how this would happen. I do not own a Peloton, but I do have a treadmill, and I also have 2 young kids. But I just have trouble visualizing how a kid could possibly end up underneath the treadmill while I'm running on it, which is apparently what happened. Sure, I could see them stepping on it while I'm running and getting launched backwards and possibly getting very seriously hurt from that. But to end up underneath it it was very difficult for me to visualize. So, in researching and understanding how the recall happened or why it happened, well, I actually found a short video clip that summarizes it quite nicely. Don't worry, in this example, it's not a kid that goes under the Peloton, it is that giant ball. So, apparently, this is what can happen. And once I saw that, I was like, okay, yeah, I could see how a small kid who doesn't know any better goes up next to it, and if it pulls them underneath it, okay, that's a problem. In my mind, that's a huge design flaw. It seemed like that treadmill popped up way too easily and forced something underneath it. Now, it took Peloton a bit more than a month to start the recall on their treadmill. I believe there's like 125,000 or so treadmills in that recall, and they've stopped selling them, which I think it's a delayed reaction. I think that they've given that video, I'm sure they had evidence of what happened. I think the reaction should have been very fast. Now, since they have come out about the whole recall, it does seem like they're handling it okay, even though apparently it took them a tragedy for it to end up there. Okay, now this brings us to trying to come up with a fair value for Peloton stock. Now, Peloton is a fairly young company and they're just starting to go profitable. In fact, it was 2020 and a lot likely the things that happened in 2020 that caused them to go profitable. But because of that youth, something like discounted free cash flow doesn't make a lot of sense, which is typically my favorite way to value a company. Now, just like we did with our Spotify stock analysis video, well, I think it could make sense to use something like enterprise value to revenue. So this is enterprise value to revenue for Peloton going over the past couple of years since they went public in 2019. And we can see that over this entire time period, well, the average is about 9x. This means that enterprise value, the entire enterprise value, is about 9 times the size of revenue. Now, people have asked me in the past, why are you using enterprise value and not just something like market cap? The reason for that is enterprise value also accounts for cash and debt. Now, in Peloton's case, they actually have a pretty good cash position. They have more cash than they have debt, so that will help them. So using revenue over the past 12 months, including their third quarter, which again just came out a couple days ago, well, if we assume that they should be trading at about their long-term average, well, that would be about 9x. Well, the fair value for their stock would be about $125 per share. And given that Peloton's currently trading at about $85 per share, well, it seems quite a good discount. Now, my hesitation here is I'm not 100% sure using the 2020 spike in the mix is the fairest thing to do. A lot of people got very excited about what Peloton was doing and how much business they were ramping up. So in my mind, it was way overpriced. So if we wanted to take a slightly more conservative approach and we didn't include all of the 2020, we just used the average before that time period. Again, the fair value the multiple would end up shaking out to be a bit more than 7.5x. It's like 7.6x. And in that scenario, the fair value for the stock drops down to about $105 per share. So over on the stock chart, well, we got Peloton about here at about $85 per share. Our more conservative numbers are at 105, and using the long-term average gives us about $125 fair value. Again, I'm a more conservative person, so I'm looking at the 105. That would imply that right now, compared to its current price, Peloton is about 20% undervalued. So the question now is, does it make sense to invest in Peloton stock today? And I think that the upside of Peloton right now is that they have, let's say, 2 million or so people that are subscribed to their connected fitness subscriptions. That's the more expensive subscription. They also have about 900,000, just short of 900,000, that are signed up for their digital subscriptions. And their subscription business will help drive better and better revenue and better margins. And in theory, this is more sticky revenue for Peloton, where most companies sell you the product and that's it. They have to wait for it to break and sell you a new one. Peloton can continue to grind out revenue from the same customers. So I think that there's a decent amount of upside to that part of Peloton's business. They can increase revenue there with relatively little cost. Now, they've only got a few products, actual physical products that they sell. There's only a few different versions of their stuff. And it's very possible that they create newer versions, perhaps lower cost versions, and reach a much wider market. So I think that there's a ton of long-term growth opportunities for growing Peloton's overall business. And I'd also like to point out that right now, about 95% of Peloton's revenue comes from North America. So you would think that the shift to go abroad is very, very possible. So in my mind, I think that Peloton looks like a very good growth stock at a reasonable price right now. And I recognize that the stock has dropped recently because of what is hopefully short-term problems that the company is facing. Hopefully the company can get ahead of this and do the right thing and try to make sure nothing like this happens again as far as the recall goes. And if they do that, I think over the long run, Peloton stock could be a very good growth stock to own. So with that being said, and because by my nature, I'm actually a fairly conservative person, I do plan on buying Peloton stock, although I plan on making it a smaller position relative to my other positions, positions like Disney as an example. I plan on Peloton being a smaller position, but I do think that for long-term investors, Peloton could be a very solid buy and hold stock. Now, part of the reason that I'm excited about Peloton is because so many stocks are overvalued right now in the stock market, and I think the opportunity to scoop up a stock coming off of really bad news makes a lot of sense in my mind to be as a long-term investor. Now, if you're curious how overvalued the stock market looks right now, well, I recently did a video where I walked through some of the key metrics, things like price to earnings for the stock market, to see how overvalued the stock market is relative to its own history. So if you're curious, perhaps that's a good next video for you to watch. I get a link right here. I get a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thanks, and I'll see you in the next video.